attendees, professors, fellow students, alumni, colleagues, distinguished guests. Assalamu alaikum wa rahmatullahi wa barakatuh. My name is يلقيها. I'm the acting CEO for the Harvard Club of Saudi Arabia. The Harvard Club of Saudi Arabia is a registered non-profitable organization and is also chaired by President Prince Mohammed bin Mansour with a board of directors and also governed with a General Assembly and a board of trustees. So I'll just give a brief introduction about the club's mandate. It's briefly in the word value. So V stands for voluntary work. We emphasize on voluntary work for short-term projects that are socially impactful. A, admissions, we support in admissions. L, we present lectures. U, university, we promote the university. And finally, E, which is engaging the past, current, and future prospect students. So now we'll go to the first part of the agenda today, which will be a short documentary about the university.
تعيش المملكة العربية السعودية بفضل من الله ثم بفضل قيادتها الرشيدة ممثلة بخادم الحرمين الشريفين الملك سلمان بن عبد العزيز نهضة حضارية تتبدى ملامحها في ظل رؤيتها الطموحة 2030 على مختلف الأصعدة. الرؤية التي أطلقها صاحب السمو الملكي الأمير محمد بن سلمان ولي العهد رئيس مجلس الوزراء، وفي مقدمتها أهم مقومات القوة الاقتصادية وهو التعليم الأكاديمي. وتأتي جامعة الأمير سلطان بن عبد العزيز بوصفها أحد الشواهد الحضارية الناجحة للمملكة في قلب تلك النهضة، وهي تعد أحد أهم المشاريع التنموية التي أسسها خادم الحرمين الشريفين الملك سلمان بن عبد العزيز عندما كان أميرا لمنطقة الرياض، وفاء واحتفاء بعودة أخيه صاحب السمو الملكي الأمير سلطان بن عبد العزيز رحمه الله من رحلته العلاجية الأولى. وخلال حفل مهيب أقيم بحضور فقيد الوطن صاحب السمو الملكي الأمير سلطان بن عبد العزيز رحمه الله، تم الإعلان عن إنشاء أول كلية خاصة غير ربحية في المملكة، وذلك في شوال من العام 1418 هجرية الموافق لعام 1998 للميلاد، وبتوجيه مباشر من خادم الحرمين الشريفين الملك سلمان بن عبد العزيز عندما كان أميرا لمنطقة الرياض لسمو أمير منطقة الرياض الأمير الدكتور عبد العزيز بن عياف. بقيادة هذا المشروع التنموي الفريد بدأ الاستعداد لإطلاق ذلك الصرح، وفي شعبان 1421 هجرية الموافق 2001 للميلاد تم تكريم الجامعة بحضور الأمير سلطان للافتتاح الرسمي للكلية، وقد توجت كلماته الخالدة ذلك اليوم المشهور.
أيها الأخوة، لقد سعدت كثيرا وأنا أحضر هذه المناسبة لافتتاح الرسمي للكلية الأمير سلطان الأهلية بعد أن باشرت الكلية أعمالها بنجاح وتميز لتكون لبنة تضاف إلى الإنجازات العلمية التي تشهدها المملكة بحمد الله.
وبهذه المناسبة ألقى خادم الحرمين الشريفين الملك سلمان بن عبد العزيز أمير منطقة الرياض آنذاك كلمة بصفته المؤسس أعرب فيها عن مشاعره ومشاعر أهل مدينة الرياض تجاه محبتهم وامتنانهم لصاحب السمو الملكي الأمير سلطان رحمه الله.
لقد أحببت وأحببت، ولقد أعطيت فرضيت، ولقد كرمت فأكرمت، ولقد راعيت فرعيت. لذلك ليس بعيدا عليك أن تكون محبوبا من أبناء وطنك. فلقد قلت مرة سابقة سلطان جمعية خيرية بحد ذلك.
وفي عام 1422 هجرية الموافق 2001 للميلاد تم تحويل كلية الأمير سلطان لتصبح جامعة الأمير سلطان. ومنذ تأسيس جامعة الأمير سلطان تسعى إلى أن تكون الجامعة الأهلية غير الربحية الرائدة في الشرق الأوسط، وذلك من خلال توفير تعليم ذي جودة عالية يرقى إلى مستوى التعليم الذي تقدمه الجامعات العالمية وفقا لأعلى المعايير الدولية، وذلك من خلال كلياتها المتخصصة بشقيها للبنين والبنات، ومراكز البحوث المتخصصة مثل مركز الثراء المالي ومركز حقائق للدراسات القانونية، بالإضافة إلى المعامل البحثية المتنوعة مثل معامل الأمن السيبراني والبلوكتشين ومعامل الروبوت الآلي ومعامل الطاقة المتجددة. وفي جل ذلك الزخم والتركيز على مهمتها الأكاديمية والبحثية، لم تغفل الجامعة دورها في خدمة المجتمع، حيث أطلقت العديد من المبادرات المجتمعية، وفي مقدمتها برنامج التعليم من أجل التوظيف. وقد انعكست كل تلك الجهود المخلصة بجامعة الأمير سلطان بن عبد العزيز في صورة إنجازات تحققت على أرض الواقع. فعلى سبيل المثال لا الحصر، كانت جامعة الأمير سلطان الجامعة الأهلية الأولى التي تحصل على الاعتماد المؤسسي والبرامجي من المركز الوطني للتقويم والاعتماد الأكاديمي NCAAA. وكذلك حققت الجامعة المركز الأول في التوظيف لخريجيها بحسب إحصائيات صندوق الموارد البشرية هدف. وتشهد الجامعة اليوم خططا توسعية لمنشآتها التي تعد الأكبر منذ تأسيسها. مسيرة حافلة بالإنجازات انعكست في صورة حقائق وأرقام توضح ذلك النمو الكبير في مختلف قطاعات الجامعة، من الطلاب وهيئات التدريس وعدد الكليات والمباني منذ نشأتها وإلى اليوم. وتستعد جامعة الأمير سلطان بن عبد العزيز لاحتضان مؤتمر الجامعات الرقمية على مستوى الشرق الأوسط وشمال أفريقيا في شهر أكتوبر القادم، تأكيدا وتتويجا لتلك المكانة العلمية التي باتت تحظى بها الجامعة على المستويين الإقليمي والدولي.
Now with the speech with His Excellency Dr. Ahmed bin Saleh Yamani, the President of Prince Sultan University. تفضل.
السلام عليكم ورحمة الله وبركاته. Good evening, ladies and gentlemen, our distinguished guest speaker, members of the Saudi Harvard Alumni Club, members of PSU community, and our esteemed guests. Greetings to you all from Prince Sultan University. I am pleased to welcome you all, and we truly thank you for joining us to attend this great event, planned and organized in collaboration with the Saudi Harvard Alumni Club. On behalf of all PSU community, we would like to express our sincere appreciation and gratitude to the Saudi Harvard Alumni Club President, CEO, and all members of the club for coordinating and for hosting this timely talk by Professor Kwoiltch. I would also like to reiterate our special thanks to our guest speaker, Professor John Anthony Kwoiltch, for taking the time from his busy schedule to be here with us for a conversation on the U.S. economy, the recent banking crisis, leadership issues, and the challenges that we are facing today. There is no question that these are timely matters given the past few economy, troubled time, and uncertainty that have engulfed businesses in the region and indeed throughout the world. Countries as well as individual companies have felt and continue to feel the tremors from the last banking crisis. None was nor is immune to that. Indeed, in some respect, the United States has been the worst affected. Prince Sultan University is truly proud to be directly linked to one of the milestone changes in the higher education system in this country, and that is the introduction and establishment of private higher education. Because up through 1998, all institutions of higher learning are public. The non-government higher education was unheard of in the kingdom. This, of course, have changed after the birth and the launch of PSU, because PSU actually has changed the landscape of higher education system in the Kingdom of Saudi Arabia. In 1999, Prince Sultan University was established by the Riyadh Philanthropic Society for Science under the auspices of the custodian of the two holy mosques, King Salman bin Abdulaziz, when he was at the time the governor of Riyadh region and the chairman of the board of directors of the Riyadh Philanthropic Society, which is the legal umbrella for PSU. The university was established in dedication to the late Crown Prince Sultan bin Abdulaziz. So over the past 24 years, PSU has succeeded in branding itself as one of the top academic institutions in Saudi Arabia, known for the rigor of its program and the quality of its graduates. PSU is ranked number 1 in employability in the kingdom. Today, PSU stands tall and proud and continues to do its best. To do the best has been and will forever mark PSU's work. This is in line with the Kingdom's 2030 vision, which calls on the private sector, such as PSU, to empower, nurture, and inspire young Saudis, which they make today over 60% of the nationals, to fully realize their potential as part of the Kingdom's economic transformation. They are the pride of the Kingdom and the future architects to build a better tomorrow for our nation. Accordingly, in line with the Kingdom's 2030 visions, initiatives is to extend the variety of digital services. Prince Sultan University, in cooperation with the Times Higher Education, will be hosting the Digital University MENA Conference on 9 through the 11th of October 2023. The intended purpose is to empower students and faculty to foster innovation and collaboration towards creating a technology-driven sustainable future and to reveal the latest trends in digital education. PSU puts great value upon its close and growing relationship with the Saudi Harvard Alumni Club. This relationship will offer potential benefits to us all. We are determined to build and strengthen our ties with the club. We are all beneficiaries of this collaborative venture. We are both serving the at-large communities that contributed to the Saudi workforce, which is in perfect harmony with the Kingdom's Vision 2030. We are confident that our two-way partnership opportunities in the long run will play a major role in the continuity of transfer and spread of knowledge and technology in the Kingdom. The greatest beneficiaries of these transfers are and will be both the recent and the upcoming generation of young Saudis. In closing, I would like to warmly express my special thanks to the Saudi Harvard Alumni Club and Professor John Anthony Kwoiltch for granting PSU this excellent opportunity to inspire our community and motivate them to achieve and lead in today's challenging world. And finally, I would like to take this opportunity and to personally wish to acknowledge and recognize both PSU and the Saudi Harvard Alumni Club teams for their significant role in this important event and who worked jointly so hard with PSU Business School's team to make this event as possible. Let me finish by saying that we look forward to enjoying a long-lasting and successful partnership with the Saudi Harvard Alumni Club, a partnership that will endure and award us all. And thank you all.
So I'd like to welcome Professor John. Professor John is the Leonard Miller University Professor and Vice Provost at the University of Miami and Dean of Miami Business School. He is also the Charles Edward Wilson Professor of Business Administration Emeritus at Harvard Business School. Please join me to welcome Professor John. The floor is yours.
Thank you very much for inviting me. I think All right. Well, good evening, everybody. You know, that's not a good answer. If I say good evening, you should say, all right, let's get a little bit of excitement in the room here. Before I go any further beyond thanking the President for his super warm welcome, and it's great to be at this wonderful private university in the Kingdom, is there anyone in the room who was a former student of mine?
There's one individual.
All right. I just want to make sure that I didn't give you a bad grade before we continue, okay? I always have to check that. Anyway, listen, I want to thank the Harvard Club for pulling this together. It was relatively short notice, and terrific job, Abdulatif, to you and all of the organizers, and I've received such a very warm welcome from the faculty and administrators here at Prince Sultan University. I was not familiar with the university beforehand, but it's clear that in 25 years this university has done exceptionally well, and I encourage you all to imagine how you can support the university. It's extremely important for obvious reasons that universities like this thrive in the Kingdom. I think that the university has, like many young institutions, initially focused on developing its teaching capacity, and it's now focusing on its research in addition to its teaching. Initially, of course, it focused on the needs of the Kingdom in terms of the student body being primarily Saudi, for obvious reasons as well. But as a university develops over time, it's extremely important that it become internationally recognized and develop not only an international reputation, but also collaborations with universities elsewhere in the world, because that is the way in which this university will be able to, over time, recruit even better international scholars to further buttress its reputation and the quality of the teaching and research that is done here. So it's a journey. It's fantastic that the President has been here for the entirety of the journey for 25 years. The average shelf life of a university president in the United States has plummeted to only 6 years. So you are way ahead of the U.S. average. So congratulations, sir. Congratulations. And another 25 years, I think, we should be able to count on from you. Well, look, I wanted to make sure this was sort of an interactive dialogue, not a lecture from a podium. I've been in the Kingdom 10 times. I first came here in 1998, long before it was fashionable. And obviously, it's fantastic to see the progress that has been made, especially in recent years. And I just came from the Daria project earlier today, which obviously is one of the most impressive giga projects in the country, and intended and aiming to be 100% carbon neutral and totally sustainable. And this is going to obviously be, if it can be executed effectively, a great example to the world, not just to others in the region. So very impressed, delighted to be here, and I'll hand over to you, Abdul Latif. Maybe there are some questions you would like to ask.
Yeah, well, thank you again, everybody, for your attendance. As Professor John mentioned, we'll keep it as a discussion. Yeah, if you prefer, if we can start with any questions, or
Sure.
you should go ahead and start.
You go ahead. What would you like to ask?
Okay, so give us what is really happening right now in the United States.
Oh my
We don't
God!
want media.
I asked for a question, not a problem. Let me just outline a few points. So first of all, with respect to the recent banking crisis, I think you have to look at the structure of the U.S. banking system to understand this. So in the United States, there are over 5,000 banks that are supported by the Federal Deposit Insurance Corporation. In most countries, there are maybe 3 or 4 banks that control 80-90% of the total deposits and are very closely tied to the banking system in that country and to the central bank of the country. But in the United States, because it's a large country with considerable amount of decentralization to 50 states, there has evolved this 5,000 bank system. The major banks like Chase and Citi and Bank of America, they do control obviously a significant portion of the deposits, maybe 40-50%, but a lot of small community banks serve local communities. Why is that important? It's because these local community banks, they know their customer base very much better. They know the small business owners who are asking them for loans. Those requests are not being processed by some central office or regional office of the Bank of America that might be hundreds of miles away from where that individual is doing business. That's very important to small and medium businesses in the United States, and you know that entrepreneurship is a huge part of the American success story. So if all of this went away, if it was all conveniently consolidated to 4 or 5 major banks, structurally that would be nice, but in reality it would take some oxygen out of the economy. So we have a situation where several banks have failed. If you diagnose the reasons for the failure, some are related to the management of the bank. And as you are familiar, if you have read the news reports, you will know that these banks took in a lot of deposits, parked them in low-interest securities, long-term securities, and then are confronted with a situation where the short-term interest rates go up. The depositors want to hold those deposits in banks which are supplying higher interest rates commensurate with what the Federal Reserve has imposed in the face of inflation. And so there's then a mismatch, a misalignment between what the bank is earning from the securities that it has deposited its funds in vis-a-vis what the depositors are now expecting in terms of a return. And where you have a bank like Silicon Valley Bank, which had a very high percentage of its deposits being held in accounts that were beyond the $250,000 insured threshold, those depositors quickly took out that money, and Silicon Valley Bank, I think something like $40 billion in assets evaporated from that bank in the space of 96 hours. The rumor mill started on a Friday with social media, and many of these people who are depositing at Silicon Valley Bank are entrepreneurs in Silicon Valley. They're on Twitter and Instagram all the time. Over the weekend, the run on the bank had already begun before the doors opened on the Monday morning. So you have this social media effect where there is a faster drain, a faster run on the bank. It's no longer a run, it's a stampede on the bank, and the bank simply cannot sustain itself. So if you back up for a moment and analyze this, part of it is a function of the Federal Reserve rapidly raising interest rates. Part of it is a function of the management of the bank not realizing that this danger existed. Part of it is a function of the regulators of the San Francisco Federal Reserve not doing a good enough job of forcing the bank to come into a better position in terms of matching its assets with its liabilities and not letting this risk potentially not only destroy it, but cause every bank in the United States to potentially have depositors analyzing whether or not they should take their money out. Now, one thing I skipped over a little bit there, I just want to clarify for everybody in the audience that these 5,000 banks that are under the auspices of the Federal Deposit Insurance Corporation, every account is insured up to $250,000. So if the bank fails and you had $249,000 in the bank, no problem. The federal government will make sure you're kept whole. But over 250, it's your risk. Now, what did Silicon Valley Bank do? It went to all of these entrepreneurs in Silicon Valley and said, we will give you very nice terms on your loans if you put all of your money with us. So in other words, a lot of small and medium-sized companies and the entrepreneurs, the successful entrepreneurs backing them, put all of their liquid assets into Silicon Valley Bank, so many of the depositors were way over 250,000, such that 85% of all of the deposits in that bank were uninsured. 85% were held in accounts that were over the 250,000 limit. And that, of course, is going to extremely aggravate the run on the bank, the stampede to get the money out. In most U.S. banks, in most community banks, you'll find that only about 45% of the funds deposited are over the $250,000 threshold. Since the Silicon Valley collapse, what has occurred is that there has been a bit of a flight to safety. In other words, if you had over 250,000 in your account, you're now thinking, well, I really should put that excess money with another bank. So there's been a lot of splitting of funding across multiple banks according to how much money you have. There is also, conveniently in the U.S., the InterFi system. The InterFi system is a less known and unadvertised system whereby if a depositor wishes to pay a bank a few basis points, I can't remember quite how many it is, a few basis points, they can deposit, let's say, $1 million at the bank, and through the InterFi system, the bank will lay off the $750,000 on 3 other banks and do it for you. But you have to pay a certain amount, which is only correct, as the depositor for that service. That system, that InterFi system, has mushroomed enormously since the Silicon Valley Bank collapse, as you would expect. So let me stop there on the banking crisis for a moment. I think things are stable at this point, and we won't see much additional problems, except perhaps there might be 1 or 2 additional banks where through mismanagement they have not held their risk position as tightly as they should, and the SVB malaise and demise could trigger enough scrutiny by depositors of these other banks that 2 or 3 more of them may get into trouble and have to be acquired by the big banks. As you know, Chase Manhattan, J.P. Morgan Chase, Jamie Dimon, our great Harvard Business School alum, recently acquired the assets of First Republic Bank, which was the 4th one in this story that went under. And I think he got an absolute bargain. He got an absolute bargain for the assets of First Republic Bank. But that's why, Jamie Dimon is an alum of Harvard Business School. He knows how to negotiate.
Okay, thank you. Just before I jump to the ripple effect of what the crisis, what leadership lessons can we learn from this situation, from a business perspective, from a regulator perspective, and also from a bank perspective?
Okay. So I think that one of the things that's not quite leadership, but I would say, if you'll permit me to substitute the word governance for leadership, that there are quite a few interesting lessons to be learned here. If you look at the board of directors of SVB, you find a very lightweight Silicon Valley board of directors. One of the reasons why First Republic survived as long as it did is because if you looked at the First Republic board, you would see 4 or 5 people on that board with long-standing Wall Street careers and therefore connections into the powers that be in the U.S. financial system. Silicon Valley Bank collapsed because its board basically had no way of calling Jamie Dimon and saying, hey, Jamie, what do we do? Can you help? First Republic, there are at least 5 people on that board who I'm sure had Jamie Dimon's number. So they were able to last that much longer. So it's not just a matter of the leadership of the CEO, and obviously the CEO of Silicon Valley Bank I don't think is going to work again in the banking industry, and not least because I can't give you the exact timing, but maybe 1 week before the collapse of the bank, sold $3 million of his own stock in the bank. And that's going to be very tightly scrutinized, and I would expect that there would be a high probability of action being taken against that particular individual. It's also interesting to note that the CFO of Silicon Valley Bank was the CFO of Lehman Brothers in 2008, which is also not what I would, expect to see, but amazing coincidence. I'm not sure that I know how to, even as a public relations person, how I would advise that individual to craft his CV going forward. Generally speaking, though, it's not let me give something on the other side of the equation instead of bashing these banks that failed. In marketing, we often teach people to focus, do something that's differentiated for a particular segment of the market. Don't try and be all things to all people. Silicon Valley Bank followed that exact advice. They did not try to be all things to all people. They focused on tech entrepreneurs and tech startup companies, and did so very effectively and to the satisfaction of their clients until such time that the economy forced, through inflation, the Federal Reserve to do something that the Federal Reserve has never done before in terms of the sequence and magnitude of interest rate increases. So I'm sure that before this happened, everybody was thinking Silicon Valley Bank is a very smart bank, very differentiated in an industry where there's very little differentiation. But, risk management is very important in banks. I happen to be on the board of a bank myself, and I can tell you that as a result of this crisis, the number of hours that I have to put in each week on this bank board is twice as much as it was before. And a lot of it is focused on scrutinizing the management of risk in the bank. By the way, Silicon Valley Bank went 6 months without a chief risk officer, which is also an extremely poor reflection on the management of that bank.
Comparing to the 2008 maybe you touched on what will happen, or that there will not be much that will happen. What do you think that the ripple effect will have on the current crisis? For example, in 2008, I think the economy recovered maybe in 2012 with very low unemployment rates. But what's your outlook? What do you think about the current situation?
Right. So the analogy between 2008 and our current situation is not that significant, I think, because 2008 was a very different pathology underpinning that crisis, and there were considerable improvements in banking regulations that were put in place after 2008. One thing I didn't allude to was the fact that following these new regulations, which of course imposed stress tests, examination of the liquidity levels of banks, there was lobbying by the smaller banks to raise the threshold below which it would be possible for a bank not to have to meet all of the new regulatory standards. So originally, that threshold in the legislation had been 50 million, 5 billion in assets. And then there was another set of regulations, more intense scrutiny, that kicked in at 50 billion in assets, and then another set of regulations that kicked in at 250 billion. What the regulations post-2008 did was to make the banks between 50 and 250 all equivalent to the banks at the $250 billion threshold level in terms of the regulatory oversight. During the Trump administration, legislation was passed that rescinded that particular rule. What that meant was that Silicon Valley Bank, which was around about 200 billion in assets, now became freed, thanks to the Trump revisions, freed from the more intense scrutiny that the regulators had been required to impose in post-2008. By the way, the CEO of Silicon Valley Bank, to your leadership point, lobbied intensively for that legislative change for the convenience of his bank. And we saw what happened. So, ripple effects. Curiously enough, the collapse of the Silicon Valley Bank and these other banks probably saved the U.S. consumer 0.25% in Federal Reserve interest hikes, because all of the banks started scrutinizing their credit exposure, their loan exposure, much more intensely than they had been doing. And as a result, I can see it in my own situation, where, we are operating a much tighter credit review and risk management than we were before. And so that's essentially like putting up the interest rate by, let's say, 0.25%. So it didn't go up by 0.25 when it was supposedly, it didn't go up by 0.5% when it was supposedly going to go up by 0.5%, it went up by 0.25%. And that was because of the ripple effect from the banking crisis.
So, final question before I hand it over. I remember, I think Paul Sutton wrote an article in 1995 on governance, on the topic of governance, but what he wrote, the title was Empowerment, Controlling the Age of Empowerment. So he was arguing that an executive should be empowered, people should be empowered, not controlled. This is in 1995. Mm-hmm. I know governance is very important, but what's the line between governance and empowerment?
Mm-hmm. Mm-hmm. I think you mean between control and empowerment. So I've served on maybe 10 publicly listed company boards, and my position is that I always seek to advise to ensure the CEO is successful. That is my prime goal, is to make, because if the CEO succeeds, the company will succeed and the shareholders will succeed. But that, of course, as an independent non-executive director, does not mean it's a license to operate for the CEO to do anything he wants. There is the fiduciary responsibility, which you have to take extremely seriously in the U.S. because there are many shareholder lawsuits against independent directors. And actually, many people don't want to serve on publicly listed boards for that reason. So I think that, as in many things in life, it's a balance between empowerment and trust. You know, I trust the CEO is going to want to do the best job. But I'll give you 2 examples. I was on one board where 5 independent directors quit on the same day because of the behavior of the CEO. And the CEO lost the trust of the board, and 5 independent directors left that day. The board was 11 in number of voting directors, so 6, including the CEO, who not unreasonably voted for himself. They stayed, and the company stock price went down 50% the following day. The company survived, but it was taken over by another company and rehabilitated. Another case, I was on the board of a company in which the founder, chairman of the CEO, was a former student of mine, and therefore a Harvard MBA, a very capable and intelligent guy. We were at about $3 billion running rate in revenues, attacked by an activist investor. And at the end of the day, after being given almost a year and a half to really change gears, both in terms of management style and in terms of strategy, the CEO was not able to achieve that. So I was put in the very unfortunate position of essentially having to cast a vote against my former student to change the management of that company. And that was a very difficult thing to do, but my belief was, as a fiduciary responsibility, I had to do it. So, that is where I think you have to draw the line as a independent director. It's always to have the fiduciary responsibility ahead of the empowerment and friendship element of the role.
Okay, thank you. Okay, so we'll turn now to the audience. If there are any questions, we'll start at the right.
Thank you, Professor John, for the insightful thoughts on the American economy and banking system. And I remember at the beginning of the Silicon Valley Bank crisis, many argue that this could lead to another 2008 global crisis. But turns later that this is only a limited crisis within maybe small size, medium sized banks in the United States. Although we have noticed that another giant bank in Europe, like a bank like Credit Suisse, has also faced a crisis that lead him to go out of the banking map of the world, while he's been one of the leading banks in the past maybe 80 or 90 years. I have a question in mind. Some argue that Fed decisions to increase the interest rates have impact on these small and medium-sized banks in the past maybe 1 year, since Fed started to increase the interest rates. Is that true? And to what extent that maybe have a future impact on other banks?
Okay. It is true. It has increased pressure because depositors are scrutinizing the level of assets that they have in each particular bank. Now, what banks are having to do is to educate their consumers, their customers, that you can hold more than $250,000 in my bank. And the way you do that is you hold $250,000 as John Kwoeltsch. My wife holds $250,000 as Joyce. We hold a joint account for $250,000 with the same bank, so already we're now up to $750,000, right? So all of that is legitimate under the current regulations, but most consumers don't know about it. So in order to preserve their assets, many banks have been very out front educating their consumers on how to manage their accounts within the bank to hold the assets that they have. I think that generally speaking, the publicity around this crisis in the U.S. Obviously results in every bank in every country in the world taking a closer look, hopefully, at its risk management and its credit exposure, and all depositors questioning whether or not the bank is sound. And the Credit Suisse failure is sort of part of an outtake from that trend, in my view. Some people argue that the depositors should not have been made whole by the federal government. But there is an insurance program that is in place in the United States whereby all banks collectively contribute to a fund that insures against bank failures. These bank failures in their totality greatly exceed the amount of money in that fund. But I think the principle is in place that, consumers have to be protected in terms of their deposits. If they are not protected, then there is going to be a lot more cash under mattresses, and that's going to be very disruptive to the flow of the economy. So, the answer to your question is yes, it's had an impact, a ripple effect, which we didn't mention before, internationally, with so many others among us looking to make sure that we are managing our assets judiciously and not pooling them, too much of them, into one place. By the way, I'm willing to answer questions beyond the U.S. economy on any manner of subjects, and almost nothing is off limits. While you're thinking of some exciting questions to ask, and by the way, I want to remind everybody that a question is a single sentence that ends with a question mark. While you're dreaming up some questions that qualify, I would say that there are only two people who I listen to in the media regarding the U.S. economy. One is Larry Summers, and the second is Mohammed El-Arian. Those are the only two people I listen to. Everybody else, in my opinion, is noise. I like to keep my life simple, so I just listen to Larry. That could be a good name for a podcast. But Larry is too serious to do that, I think. But, you'll recall that both he and Mohammed El-Arian were sounding the alarm regarding inflation long before the Federal Reserve got into the game, right? It was months and months, 6-9 months of this inflation is transitory, this inflation is temporary due to supply chain issues out of China and so forth. And that was simply wrong. Yes, the supply chain disruption was a factor in that inflation, but it was not by any means the only factor. Larry and Mohammed called it. Unfortunately, the chairman of the Federal Reserve was waiting to be renominated for a second term and was frozen in his office doing nothing, waiting for his nomination to come through.
Okay.
Not wishing to be controversial in any comment I make.
So, yes, you were talking about exciting questions. So I went, you won't believe it, I went to ChatGPT and I asked him what would be the exciting question to ask Professor John Kweldge. He gave me 8 different questions.
Okay.
But I'm not going to say all the 8 ones. I'm going to ask 3 of them, maybe I will see maybe good. Right. The first one said, what steps do you think financial institutions should take to improve transparency, compliance, and ethical behavior in the wake of the recent banking crisis? Mm-hmm. This is the first one.
Right.
The second one, how do you think the technological advancements, such as the rise of blockchain, cryptocurrencies, will impact the banking industry in the coming years? Mm-hmm. And the last one I will ask, what advice do you have for individuals and businesses that are looking to navigate the current economic climate and mitigate the risk of a potential future banking crisis?
Okay.
That's just 3 out of 8.
Right. All beautifully articulated. So, look, transparency is something that everybody agrees to until it actually affects them. I think that, if I may analogize for a moment from a sort of different example, if you look at pricing policies of firms selling to other businesses, typically there is a big tension between the simplicity associated with having a transparent pricing policy, essentially like a rate card that newspapers used to put out there and say, this is the rate that we charge for a half-page ad or a full-page ad. So there's the tension between that transparency and wanting to obfuscate the pricing so that you can maximize your profit generated by price discriminating from one customer who may not be price sensitive to another customer who is price sensitive. So am I making myself clear? So, if you have a single price for everybody, you're leaving money on the table because there are some people who are not price sensitive who would have paid more for what you're offering than you're charging, right? And I find in all discussions regarding transparency in business that there is this tension that occurs between the profit maximization from price discrimination, which requires non-transparent pricing, and the profits that can be generated by simple, straightforward pricing. Now, the same thing applies in any regulatory context as well. If the regulator requires me to disclose X, Y, and Z, of course I have the obligation to disclose it. And for the most part, more sunshine is better than less sunshine. But it doesn't mean that the banks or any industry affected by requirements for more disclosure are going to necessarily accept that. They want to keep things complicated in order to be able to manage different customers with different priorities. So that's sort of my answer to the first question. Just remind me, sorry, sir, the second one.
The other one, how would you think that technology advancement, such as the rise of the cryptocurrencies and the blockchain technology, will impact the banking industry in the coming years?
Right. So blockchain is clearly of great value as an efficient mechanism for basically securing transactions through the value chain. And I think blockchain is going to be hugely helpful in terms of facilitating better, faster, cheaper supply chain management in a vast number of fields. Cryptocurrency, of course, is associated with blockchain, but it's really an application of the chain in a context that is largely still unregulated. I do want to actually compliment the European Union for having, a couple of weeks ago, come out with really a very, very, I think, comprehensive set of regulations around cryptocurrency that balance the opportunity for innovation in that sector with the need for consumer protection. In the United States, the regulation of cryptocurrency does not exist as a separate freestanding regulation. It only exists in the context of the SEC, the Securities and Exchange Commission, filing enforcement actions against people who have violated general regulations, as in the FTX case, for example. But the Europeans, I think, have actually done something that the U.S. Congress, if it could ever actually legislate anything, could actually learn from in terms of having this very balanced and nuanced set of regulations. Obviously, the cryptocurrency sphere is still very much the Wild West, but I remember listening to a speech 5 years ago by the head of the International Settlements Fund that basically dismissed cryptocurrency as something that would never happen. And it happened. And it will happen again, and it will continue to happen, and there will be regulatory constraints placed around it, but it does have a role to play as a competitor to the traditional banking system. And I know, as is always the case when disruptors challenge the incumbents, the major banks in the U.S. and I'm sure elsewhere have their cryptocurrency units that are already in place to help those customers, those clients who wish to place some assets with the cryptocurrency sector. It's going to happen. It's going to grow. It's going to be 3 steps forward, 2 steps back. There are going to be more crises, but eventually there is a better, cheaper, faster element to what cryptocurrency through blockchain can deliver that will result in it having a significant presence in our payment system.
Okay.
The other question.
All right. What advice do you have for individual and businesses that are looking to navigate the current economic climate and mitigate the risk of a potential future banking crisis?
Right. So, I mean, obviously, we've stated clearly already that there are a number of things that individuals can do, especially in the U.S. I can't comment on other jurisdictions, to diversify their portfolios and make sure that a minimum amount of their assets are placed at risk through over-concentration. And probably the same advice is relevant to businesses as well.
The last one, maybe that would be... okay, what are some of the emerging trends and challenges that you see in the banking industry, and how can we adapt to meet these challenges?
Okay. So a major issue in the banking industry as a legacy industry that we haven't touched on yet is the bricks and clicks element of the competition. So... you know, the main banks in the United States, the J.P. Morgan Chase, the Bank of America that I've mentioned already, these banks are burdened with a tremendous amount of real estate. And obviously there is a progressive migration in terms of transactional efficiency and familiarity on the part of consumers to be more comfortable progressively with managing their accounts, moving their funds around online. The trust in the integrity of online banking has improved enormously in the last 5 to 10 years. And so the question is, for many of the major banks in particular, the major clearing banks, do we need hundreds of branches with all the real estate and human capital associated with them? Is that a drag on our performance? So as in many other cases, many other areas, for example, where Amazon has come in and disrupted the traditional bricks and mortar business model, you have one segment of consumers who are gradually migrating to total comfort with online shopping, online banking, and you have another group of customers who are still often in small towns, communities, not in the major cities, who are very much community oriented, and you want to go down still to their local branch bank in order to do business. So every organization at some point in its life usually has to manage the balance between the new and the old, the migration to the clicks and maintaining a presence in the bricks that are what brought you to the dance in the first place.
Well, I mean, let me give the others the opportunity to ask. Yeah.
Let's open it up to some Harvard students. Yes, we have some ladies who want to ask some questions. Yeah. Yeah. So I think you know, the initiative of Premier Xi Jinping of China in this regard is very interesting. I think you are alluding to that. President Xi, of course, has been trying to promote the yuan as a settlement currency, international settlement currency, in the last couple of years. It hasn't done that well. But, you know, these things take a long time to evolve. Hasn't done that well. And I think what he and his advisors have been pivoting to is an attempt to use the BRICS In other words, Brazil, Russia, India, China, South Africa, but maybe with the kingdom here as an extra S on the end, to basically make this yuan or alternative currency concept to the dollar a collaborative effort rather than China attempting to do it on its own. I mean, I think, look, I mean, competition is good. I'm totally in favor of it. I think it will take a long time for that shift to occur. You have a system at the moment where, let's say, the U.S. is 23-24% of world GDP, but something like 85 or 90% of the settlements internationally are in U.S. dollars. In a sense, that's unfair. On the other hand, the fact is that it is very convenient for most people in the world to settle in U.S. dollars. And until the yuan or the BRICS alternative can be better, cheaper, or faster than the U.S. dollar, people are still going to use the U.S. dollar. Now, government-to-government transactions, you know, the kingdom here cuts a deal on energy with China. Government-to-government transactions can be settled however those governments wish to settle them. But in terms of the private sector, I think there's a long way to go before the private sector finds the yuan or a BRICS alternative currency better, cheaper, or faster than the U.S. dollar.
Thank you. I have one more question.
Are you allowed 2 bites of the apple? I know in the kingdom you may have been waiting a long time, so...
It's related.
Okay.
What I want to know is the U.S. government, why are they keen on the Fed now? Thank you. Are the U.S. government keen on creating a crypto coin like Fed now? Does it have anything to do with the possible collapse?
Say again, I missed the... Once you used the mic, I couldn't hear clearly, so... Yeah.
Okay. Why is the U.S. government keen on creating a crypto coin like Fed now?
Okay.
Does it have anything to do with the possibility of the collapse?
No, I mean, I think that there's... this is sort of defensive talk. As you can imagine, U.S. regulators are not keen on cryptocurrency. It means they can't go home at 5 p.m. every day. They've got another problem to worry about, regulating crypto. You know, part of the demise of the various banks is said to be related to the fact that the regulators wanted to send a lesson to banks that were, you know, getting too heavily involved with companies that were in the crypto space. And First Republic and Signature Bank in particular, which I didn't mention before, they had a lot of depositors who were small and medium-sized businesses in the cryptocurrency area. Having said that, I think that like any incumbent protector program, you know, an incumbent always has to research the disruptor, in this case crypto, so a lot of attention is being paid by the Fed to what it might do or not do with respect to responding to the interest in crypto. I think most people would regard a Fed coin as being a sort of premature capitulation that would almost legitimize prematurely the entire crypto concept. So I would see that as being something that would not occur in the short term.
Thank you very much.
Okay. I'll leave it to you to...
Just...
We have a banking crisis in one bank. How would it mostly affect other banks in that country? And what about the other bank internationally?
Yeah.
And if it does so, how fast would that happen and how to prevent it?
Mm-hmm. So what you're referring to is contagion. And, you know, there are two elements to contagion. One element to contagion is what you might call social media contagion, where fear is spread in a hyper-efficient fashion through social media around the world. And then there is legitimate financial contagion, where the failure of one bank actually results in pressure of a financial nature being placed on other banks in the system. Unfortunately, we're in an environment in the global information age where the social contagion can basically override the financial contagion and actually cause the financial contagion to occur independently of whether or not the underlying financial conditions warrant it. You know, I think every Federal Reserve system, every central banking system has to be thinking through, based on the evidence from the U.S., how to contain first of all, how to predict and prevent such events occurring without throttling the availability of credit to the economy. And then secondly, how to contain it once it starts, so that, over the weekend when this was all happening in the U.S., no U.S. regulator spoke, no U.S. elected official spoke publicly about it. And, when you just cannot be slow off the mark when it comes to managing crises these days. And that applies to any CEO of any company as much as to this situation you're describing.
Back here.
Hello, thanks for the insightful discussion, Prof. John Quilch. I'm Nof Bendamit. I've just obtained my PhD in finance from the University of Manchester in UK, and my question is slightly motivated by my research interest. I'd like to ask about the economic uncertainty, as economic uncertainty has increased to unprecedented levels since the 2008 financial crisis, and it continued to spike since then. And according to the IMF, the financial channel is the main channel through which uncertainty transmits from the US to other economies. And obviously, as higher uncertainty would generate economic slowdown, thinking of the cross-border contagion and the impact of the COVID pandemic, in your views, how the current banking crisis could affect the global economic recovery? Yeah. Also, my second question, please, is would the crisis affect the U.S. position as the safe haven investment environment for international investors?
Okay.
Thank you.
So I think that the impact of the Federal Reserve aggressive interest rate enhancement program is obviously something that the global South is especially concerned about, because all of the debt that is held by those countries, obviously, the cost of holding that debt in dollars increases whenever the U.S. increases its interest rates. So there is definitely more pressure on emerging economies that have significant dollar-denominated debt as a result of this necessary increase in the interest rates. I do believe, as I implied before, that if the Fed had been earlier off the mark, that we would have already got this inflation under control. But by delaying for 9 months or so, they caused the problem to be much worse. It's like any cancer that spreads if you don't catch it early. So I feel that what's going to happen is that there will be some prospective debt restructurings that will have to occur to enable some of the countries in Latin America and Africa in particular from defaulting on some of the debt obligations they have. I think the U.S. will be fully aware of the impacts of its aggressive rate increasing and will be, I won't say motivated to do this adjustment, but I think they will quickly understand that these adjustments will be necessary. I think in addition, by the way, I mean, it's also worth in this context commenting on the China Belt and Road Initiative, where there are many, many investments that China has made around the Belt and Road Initiative that are also in very severe trouble and potentially going underwater. And a big potential problem for the Chinese economy is that potentially as much as a third or a half of all of its investments in the Belt and Road Initiative could need to be written off as a result of poor performance and over-optimistic forecasting.
Good evening. So my question over here. At the beginning, you provided a very clear, coherent explanation of how the crisis happened for Silicon Valley in terms of the amount they kept and the Fed's effect of increasing the rates. Does that mean the Fed, in a sense, knowingly created the crisis? They would have understood the consequences of their actions, and hence, could this happen elsewhere?
Okay. So that would be an answer that would be so far above my pay grade that I would risk retribution if I publicly stated my opinion. The answer is yes.
For U.S. national debt, should we worry about? Is it going to continue?
Who's asking the question? Okay, I can't see, sorry. It's a guessing game. There are these mics all over the room, and it's hard to try to find which one is speaking. But go ahead, sir. Yeah.
No, just U.S. national debt. It just continue to increase.
Yeah.
Should we worry about? Our money is big to the dollars, so I know it will affect.
Sure.
So when is it controllable? Is it?
Look, I mean, I think that behind your question is a very important issue, and that is, to what extent is the United States still a responsible global leader as opposed to acting in its own short-term interest? You know, that's always a question in any industry where you have the market leader. You know, the market leader has to behave in part on behalf of the health of the industry, not just in its own self-interest. In the same way, in the world of nations, the leader has to have the global interest in mind, not just its own self-interest. One other point I would make, though, is, and you know, of course, we have had a lot of problems in the last 6 to 8 years with respect to becoming too inwardly focused and abandoning our international reputation and our international conversations, and therefore our international influence has been put at risk as a result of the last few years. The other thing I would say, though, is that regarding the growing and escalating size of the U.S. debt, which obviously, if you compare it to 20 years ago, is just enormously larger. I may not have this quite right, but I think it may be 6 times larger than it was 20 years ago. That on the surface is a very bad thing. Most people use the metric of national debt as a percentage of GDP as a metric. The way in which the debt growth is being justified is by using a different metric. It's being justified by using the metric of national debt as a percentage of asset value. In other words, the GDP in 1 year is only a small percentage of the total value of all U.S. assets. Land, property, cash, whatever. So when you look at the debt, the U.S. debt, as a percentage of the value of U.S. assets, it's still a very small number. And I think it's unfortunate that this is now being used as a way of justifying wanton, profligate, wasteful expenditure. But that's what's happening.
Can I ask here?
Right here. Please.
Can I ask a question, please?
Yes, please. Yes.
Now, I want to ask you a question. Are you really with the merging between banks? Are merging between banks, is really you encourage that? Is it really will lead to maximizing profit? Is it really happen, smaller banks and larger number of banks than few banks is much better for the economy or for the people as a whole? What is it? Because sometimes the merging, you have the minimum efficiency scale and early, scale of economy. So what exactly, is it really in the benefit of the country to have fewer banks and larger banks, or having many banks, and as you said in USA, 5,000 banks? For
yeah. So, I mean, very simply, I think it depends on what the asset value of the entire economy is, right? So a small community bank in the United States would have assets under management of maybe $5 to $10 billion. Okay, so when we're talking small banks in the U.S., we're not talking about, $100 million in assets under management. I mean, there are some banks that are that small, but they are, very few and micro banks. So the number of banks that is appropriate for an economy, given the scale efficiency issue, is obviously depending on the size of the economy. And in many economies, it would be simply absurd to expect there to be a lot of small banks because the economy would not be able to profitably sustain those institutions. Remember also the geographic spread of the United States, as I said before, the federal system, the tradition of decentralization, that's accounting for the development of many of these individual community banks that have sprung up over time. And finally, another factor, until I think maybe 30, I can't quite remember the date, but maybe 35 years ago, until 35 years ago, a bank could not have retail branches outside of its own state. So there was a structural incentive in the system for these smaller banks to appear and survive.
Okay, question.
Issues in the United States, inflation, financial sector, and shrinking or economic recession.
Shrinking, sorry. Say again.
Economic recession. Let us say there is a potentiality, as we heard in the economic recessions. So if we need to fix this inflation, we have to sacrifice for the economic. If we need to fix the financial sector, we have to sacrifice of the inflation. My question is, what is the priority for Federal Reserve right now? To fix the inflation? To fix the financial sector? Look at the economic growth. Another question about the leadership. The CEO of Silicon Valley, he said, I will not leave my position till I pay bonus for my employee. Do you agree or disagree? Since he take care of his employee, I think he's a good leader. What do you think?
Okay. So regarding the first question, I think the two are not entirely orthogonal to each other. They're not entirely opposite to each other. So there is no question that the inflation has to be brought under control. Whether or not it will be brought under control in the sense that it will revert to 2% as a steady state, I don't think so. I think the Fed will be very happy if it can get it back to 3%. And especially, although the Fed is independent on paper, you know, when you have a Democratic administration in Washington, you know, there is a slight tendency for the administration, if it's Democratic, to get less pressure being brought on the economy, you know, that might result in jobs being lost. So where there's a trade-off between maximizing the reduction in inflation and squeezing the credit in the economy to the point that jobs are being lost, you know, if there's a Democratic administration, there'll be a slight tendency not to overdo it on the inflation fighting if it's going to cost jobs. If there's a Republican administration, that's not as big a concern. And then I think that there will be regulatory change, there will be regulatory improvement. For sure, there will be greater scrutiny that will be brought into place for probably restoring the regulations as they were post-2008 that were rolled back, as I indicated earlier, by the Trump administration. I would expect to see those regulations put back where they were beforehand. You know, as to your second question, you know, this particular bank failed, and everybody who's working for that bank has been put on the street as a result of the bank failure. Ultimately, whatever the environmental circumstances may be, whatever the noise may be, the person who is the CEO is responsible for the health of that corporation. And, you know, if the CEO fails, you know, that's a personal failure on his part towards every family that's represented by an employee in his organization. Is he in a position to pay bonuses to employees as the bank is collapsing? You know, I would think not. I would think that it is better, as was the case here, for the bank to be taken over and for the new management to determine whether or not, in the interests of the depositors, key employees need to be retained, and therefore legitimate bonuses need to be paid in order to retain those employees. But my belief is that from a governance point of view, you know, once the problem has surfaced and become fatal, that it's up to the new management to make those decisions, not for that CEO who has failed himself to make those decisions. Okay. Okay. Okay, that is a 180-degree pivot. Let me tell you my point of view, which may surprise you. I am someone who always, throughout my career, embrace innovation, especially in technology. And in this particular case of ChatGPT, let me tell you what I have said to my professors regarding this phenomenon. The number one thing I have said is, if every student in your class, if you give an assignment, if every student in your class goes to ChatGPT to get the answer, then you yourself should go to ChatGPT and get the answer, and you should grade accordingly, because, you know, what we need to see is over and above the ChatGPT as what qualifies for the grade. And the second thing I've said to them is, I want you to focus much more on in-class participation, because you can't consult ChatGPT if I'm talking to you as professor to student and asking you a question in the class. If you don't understand it, you reveal that immediately. If you haven't done the preparation, that's revealed immediately. And I'm going to grade that course 50% on classroom participation and only 50% on written work. And I'm telling you, if ChatGPT results in a higher percentage of grades around the higher education world being on in-class participation, that will be of huge benefit to the students as well as to the higher education system. Why? Because one of the most important attributes that employers are looking for when they're recruiting students is whether or not the student can answer questions intelligently and engage in an intelligent conversation. And if they're just sitting there like deaf mutes for 4 years in course after course after course, there will be no capability in that regard. This is why the Harvard Business School case study method is, to my mind, one of the greatest teaching approaches in the world. And that's why it's been so widely adopted in business schools and beyond business schools, because all of the work is done in the preparation before the class, and then it's a participative conversation between the instructor and the students, and among the students, not just instructor to student, but among the students. And you learn so much in terms of how to politically manage yourself in a conversation if you have been in those kind of classrooms.
So thank you for the different question. We're going to wrap up. Just one final question.
Yes, please, one last question regarding the ongoing banking crisis. Now, in the wake of the Silicon Valley collapse, President Biden stated that his administration is working closely with financial regulators to make sure that households and businesses affected by the Silicon Valley collapse are not affected, and they're going to have full access to their deposits. Now, help me understand how those claims are going to be substantiated, knowing that there is a ceiling of $250,000. I'm a former banker myself. I was at Wells Fargo when the ceiling went from $100,000 to $250,000. So I'm finding it very hard to think, in the absence of a possible bailout, how are those limits going to be met? So do you think President Biden has any plans, like any concrete plans for those, meeting or having access to the deposits, or are those just, agendas for his upcoming, presidential elections? Thank you.
Okay. Well, I wouldn't wish to speak for the Biden administration, but from their point of view, obviously, they have to reassure the voters throughout the U.S. So there is a debate at the moment as to whether or not that 250,000 ceiling should be raised to 500,000. I personally do not believe that it's necessary, and I think that if every time there's a crisis we just ratchet up that number, that is a penalty that future generations have to live with, and it's also, frankly, not in the American spirit that, people should be able to manage their affairs within sensible bounds. As I said before, there are many mechanisms whereby an ordinary household can greatly increase with a single bank the amount of deposits that it has. I didn't mention earlier that if you have a child, you can also have 250,000 in the account of the child, etc., etc. And then this interfi system that I alluded to does have the ability to lay off all of your excess over 250, if there is any, into other banks. You just simply pay maybe 0.25% or 0.125% penalty to have that service. So I personally am on the record as opposing raising the 250,000. I would say that that makes me less than a full-throated supporter of the Biden administration.
Okay, thank you so much, everybody.
This gentleman, if I could just ask, because this gentleman over here has been waiting for a while, can we just, if it's quick, can we just make a quick one? No, I would not, no. But I'm, as you can see, I'm about 10 years older than the picture that was circulated to you, and I'm old, and therefore I don't want to put my money at risk. Okay, you are young and handsome, and ready to take on the world. So you are probably going to roll the dice. So.
Okay, so shall we conclude?
Yeah.
Okay, thank you so much, everybody. On a closing remark, I would also like to thank Prince Sultan University for co-hosting this event, and I hope you enjoyed it. Hopefully we'll have more sessions in the future, and thank you so much. I would also like,
Thank you. Thanks to everybody for coming. If you want to please link in with me on LinkedIn. I post a lot of material on current issues on LinkedIn that you may find useful to follow. Thank you very much again. President, thank you very much. Congratulations on the university's progress.